We have Mr. Vinod Panikkar, the CFO Muthoot Capital Services, who joins us now on the phone line. Hi, Mr. Panikkar. Thanks so much, sir, for joining in. Well, we wanted to speak to you on two aspects. One is the securitization deal that you all have done with HDFC Mutual Fund for around 236 crores. And the other factor is the slowdown that we have been witnessing in the auto space. Let's start off with the first part then. You have inked this securitization deal with HDFC Mutual Fund. Give us a sense of your current borrowing mix and how much does securitization form as a percentage of your total loan book. Go ahead, sir.
Good afternoon and thanks for having me on the call. Maybe to answer the point you asked about the borrowing mix, let me put it this way. Roughly 72% is through banks. About 24% is through securitization. The rest is through public deposit and other things. We are one of the few deposit-taking NBFCs. And that's how the total spread, the breakup is.
Okay. What about your total borrowing rate, and with an increasing percentage coming in from securitization, what would your borrowing rate come down to?
See, last quarter that borrowing rate was at about 9.7, 9.8%. We, on an overall basis, we expect the cost to be about 30-40 bips higher in the current quarter, because the rates are going up, and while securitization has happened, it has happened at a price, and definitely all the other lenders have also, they are increasing a little bit, all of them. So that pricing, that will come, or that will be taken into the pricing, and I expect a 30-40 bips increase in the current quarter.
Securitization is currently 23% of your borrowing mix. You're expecting it to go higher, because earlier I'm guessing this 23% that you're talking about is including this latest deal that you've done with HDFC Mutual Fund, correct? Do you expect it to go higher even from here, maybe to 30%?
We are, as per our company policy, we are permitted to go up to 35. Obviously, we would want to be in the 25 to 30% range, because that opens up a new, in fact, you started the conversation by saying that it opens up a new avenue. We have been doing it while we have been doing it for 2.5 years. We have been very choosy about it, but because the pools have been behaving well, the investors have been coming regularly coming back. Somebody has taken once, he will come back on the second time also.
I just want to talk a little bit more. Now, the securitization deal with HDFC Mutual Fund, the borrowing rate is 11%, right? Which is higher than your average borrowing cost.
It is.
Okay, so what was the reason for why the securitization route? Is it that the company is not able to raise sufficient amount from the banks?
That's not the reason. Definitely, let me say, the benefit of a securitization is the transaction is so much of the portfolio is taken away from the books. So it's a off-balance sheet kind of transaction which is there, and it helps me with my capital adequacy, which was always good. It only becomes better, and that reduces the debt to equity. And that is another benefit to us. And obviously, at this point of time, cash coming in is definitely always beneficial. The name HDFC Mutual Fund it's a additional benefit for us. Now, whether the overall cost will go up, I think I mentioned that on an overall basis, I expect about 40 bips kind of increase in the cost in the current quarter.
Okay, so this will compress your margins then. If your borrowing cost is going up by 30-40 basis points, are you able to pass it on to the customers? We
have been passing on a regular basis. In fact, we last did it sometime in November. November, December, we had done some bit of passing on, close to about 100 bips we had passed on. That will continue to happen.
Let me now come to the two-wheeler as well as the four-wheeler slowdown that we are witnessing in the market. First, Mr. Panikkar, if you could just give us a breakup of your loan book mix. What percentage of it is given out to two-wheelers as financing for two-wheelers? What percentage for four-wheelers? Just give us a breakup of your loan book mix.
As of end of December, out of the 2,600 odd crores loan book that we had, roughly 90% was two-wheelers. And the balance 10 was other loans.
Let me now
There's been a big, slowdown. We have been having a lot of two-wheeler makers who have come on the channel. We have had dealers as well. They are talking about inventory levels of 100 days, somewhere even at around 150 days. So has this had any kind of visible impact on your business, on your lending? Have you seen a big slowdown?
We had seen a bit of slowdown last quarter, and the current quarter, while things have not gone back to the earlier levels, we are fairly comfortable with the kind of volumes that we are seeing. Maybe we could have done maybe 10-15% more, and we would have been happier about it. But we had, at the end of Q3 last quarter, we had made certain commitments saying that on an overall basis, we would have a disbursement of close to 650 to 700 crores. We are fairly confident that we should be able to do that.
Okay. You said, but you have faced some slowdown.
Yeah.
Can you quantify that for us?
The overall industry over the last 3 months, there has been a 5%, anything between 2% and 5% drop on a month-on-month basis, for each of the months with the corresponding volume of the last year. So that kind of growth reduction has happened. So that some bit of it has come to us also. But I think our biggest strength has been that we have been expanding our geography, which has helped us possibly retain the kind of numbers that we did earlier.
What's the current geographic breakup?
We are currently in about 18 states. South happens to or continues to be our biggest market, with roughly 75% of our book being from there, roughly 65% of the Q3 disbursement having been from South. But North, East and West, we are expanding, and the numbers are coming because of we getting into newer dealer points and things like that.
Oh, Mr. Panikkar, if you could just tell us, what is the loan book growth that you're expecting now for FY19? Do you see the slowdown extending into FY20 and therefore FY20 growth rates being affected? And secondly, also, has the asset quality deteriorated? Will it result in an increase in your gross NPAs?
The loan book growth for the first 3 quarters put together was at about 11%. We expect it to be growing, the full year number to be in the 11-12% kind of range, in terms of disbursement. Sorry, I meant the disbursement. The loan book, we had about 2,200 crores as of March last year. The loan book should be in the range of about, we expect about 2,800 crores kind of number. And we feel that we should be somewhere close to that. Next year, we are fairly confident of the 12% disbursement and the growth in the loan book going up to about 20%. We had said that we should be at about 3,700 by FY20, end of FY20. We feel that we should be there.
Mr. Panikkar, you're sounding quite confident, but wouldn't you be a little bit worried? Because you're talking about big numbers, right? Your loan book going up from 2,800 to 3,700. You're talking about disbursements of double digits. We have been speaking to dealers as well as two-wheeler makers. They're saying the cost of the vehicle itself, or the two-wheeler, is going to go up by maybe 6 to 8% because of these braking norms. And that's what could have an additional impact in terms of volumes. Is there a way you can de-risk yourself? 90% is currently what you sell to of your loans go to two-wheelers. Is there some kind of a strategy you have in mind?
No, let me put it this way. I had mentioned about the geographical expansion that we are doing, which is possibly giving us higher numbers. And as we go forward, maybe East, West and North, we just scratch the surface. The larger dealerships are yet to be cracked. We are still in the process of that. And my confidence is basis that maybe the case in point is, I think we are talking about we are talking about two-wheeler industry growing at about 8% in the current quarter. Ours is about it should be about 1.5 times of that, but 12-13% at least. I mentioned about 12 to 13%.
One final question, Mr. Panikkar. Has the slowdown affected the ability of your customers to repay your loans? Will there be an increase in your gross NPAs?
No, it has been at about 4.8% on the overall loan book. We expect that to be retained. till the end of the year. We have always committed a number less than 5%.
Okay. Thank you, Mr. Panikkar, for joining in. So that's Muthoot Capital throwing light on a whole host of issues. The securitization deal that they've done with HDFC Mutual Fund, talking about an increase in the cost of borrowing, as well as the slowdown seen in the two-wheeler industry and the impact it's having on financiers like them, a 2 to 5% on a month-on-month decline seen for the last 3 months at least. We'll slip into a very short break on that note. On the other side, Ashwini Gujral and Prakash Gaba will join in with a few trading ideas. Stay tuned.